Hello everybody, welcome back, good morning, a little bit of a later start. It is the weekend, so, we can try and relax. I always have these late Friday nights now. I used to do my live streams on Friday nights, but I always have these late nights now with the kids, where we just watch just crap and eat crap and stuff like that. And last night was particularly late, for a couple of little kids, so I was like, I woke up this morning and I was like, oh, no, I'm going back to bed. Right, that is it. Let's have a look at the Dixie, shall we, to start with? I know, we can start with the Dixie. So after finding this big move up here, which was, on a candle body and wick high, there's a lower high. We also started going down below the Bollinger Band, which is where we pushed up into yesterday. So this is where we talk about rock and a hard place. If you're bullish on the dollar, you've got to break above, basically, with the rejection of yesterday. We do have a trend signal forming here, okay? And I say forming, it's not formed. We've got lots of components of it, but it's not formed. So we've got cross above the cloud. Price action is just ever so slightly above the cloud. Cheeky Spence below the price. So we've not got it yet. There isn't a trend signal yet. So we have to see how this one plays. Because at the moment it's not generated, but they don't normally form in this way. You normally get the cross is normally the last thing to form. So what we're looking at now would be a pullback from this area, hopefully to break down below the 50 exponential, which is where the support is. So you've got support, resistance. And if you look at the trajectory of the 20 moving average and the 50, you've basically got yourself a bit of a symmetrical triangle formation, which gives you a 50-50 idea of where and how a breakout is looking to take place. I still think that the best way for this to play is to pull back and consolidate actually from now on over a period of months throughout the majority of the year. That's what I expect to see. But in the very short term, you've got this symmetrical triangle basically, which will give you a breakout or breakdown. A breakout will obviously take you probably to at least the candle body highs, 109.3. A breakdown will take you down to this support, 106.6, and that is one step closer to a deeper retest on the 200. So that was boring, wasn't it? It was really boring. So let's have a look at Bitcoin then, shall we? So Bitcoin, what are we having a look at now? Right, so we're below all moving averages of significance on this 50. On the daily, losing the 50. Yesterday we got a fine rejection on that, just short of $100,000. It's a decent move, but a rejection all the same on a 21 exponential, similar to a Bollinger Band. You're looking for a rejection now to continue. So we've got candle bodies down here at 92,350. You might see candle or a wick into just below 95 and a turnaround from there with another move up a little higher to around 101. Look, I mean, it is what it is. There's nothing we can do about it. All the markets are a bit slow and sluggish and generally negative. The S&P closed down 1% yesterday. Everything's a little bit like that. And if we look over here on the 4 hour, you see nothing more than a death cross retest. So what do you expect from a death cross retest? Rejection, back down to where you started from, which is basically what happened. That's basically where we are right now. And on occasions, continuation. So that is the way that the chart is. There's nothing else we could do about it. The death cross retest has now taken place. The rejection has at least fulfilled the first expectation. The next expectation, if any, would be continuation. And if that is going to happen, a move down below 95, maybe towards 92, but at least to 95 is probably going to happen. And maybe we turn around from there. 95s to 94s have these candles over here, which might form a reaction. So we might not see price below 94. I'm using very careful language here because we can't take away the way the chart looks. There's nothing we can do about it. We all want to see it move up sooner rather than later, but time isn't really something that can be particularly controlled in a trading environment. We all want to see the move happen today. We all want to have the targets hit tomorrow. But we can't. It takes X amount of time for it to happen, and based on the moving averages, we've been rejected, and now it's a matter of either turning around here for another run up or continuing down. As far as the momentum's concerned, it's neither here nor there. It could be accumulation, it could be distribution, it could be any of it. It's basically sideways all over the bloody place. But remember the overall expectation, which is that, price goes up and it goes down and it goes sideways. The only place it doesn't go is left. And at the moment, the expectation, the projection, not prediction, projection, is one of a continuous uptrend with a series of lows. We got that. Highs, we got that. We scalped that. We sold here. We got this. We got that. We foolishly bought in around here. I say foolishly, it's not too bad. And now we are just waiting for it to turn around and complete the cycle at some point this year. So yeah, it doesn't, just because it doesn't happen today or maybe even tomorrow or next week. Now on the Patreon, the last Patreon I heard, I was asking what other people are thinking, because I don't watch other people's YouTubes. I don't really look at anyone else's analysis. In fact, it's one of my rules, to be fair, not to look at anyone else's analysis. And if I ever do it, there's people that I follow that are usually either perma bulls or perma bears, right? And it's just a way for me to reassess my particular bias. If I'm feeling particularly bullish or particularly bearish, I'll always go and have a look at a perma bull or a perma bears chart. To see what they say. Not because I respect what they're saying, it's just that I always can rely on the fact that they're going to be counter to what I'm thinking about, because some of them are, like I say, always bullish, and some of them are always bearish. But it's not. I never look at other people's analysis because it'll take me away from my own. And I'm not saying that I'm the best trader or anything. I'm not saying that at all. But yeah, you'll have to. You'll be the judge, really. Whether I get the majority right or the majority wrong. I mean, I'm the judge because I make the money, and I'm still able to, eat and buy a new car or whatever. So I mean, I suppose I am the judge. But I mean, you will watch YouTubers, no doubt, that I won't. You will look at other people and their analysis, and I don't. Another Patreon, someone was saying about, is it Benjamin Cohen? And how he's expecting, or he's referring to a deeper drop, to see Bitcoin in the 80s and Ethereum, 1,800 or something like that. That's what I was told. And look, at the moment, things like that can be said because this is the direction it's going. And until there's a significant turnaround or evidence of a significant turnaround, then all those sort of things are, I suppose, on the table. You can say those sort of things because, as far as the price is concerned, it's not going up and it's not going down. I think it's more useful in this year to refer mostly to higher targets because the market cycle points to that. And some people will be left behind if they put limit orders in too low. We talk about this all the time. We talked about it before XRP rallied, And saying, look, if you want to buy XRP, now is a good time as any. We're talking about a significant breakout if it were to happen. So what's the difference between 51 cents and 50 cents and 48 cents and maybe even 42 cents when the targets are 2, 3, maybe 5 or even much higher dollars? What is the difference? You've got to reflect on that and recognize what it is. It's all about risk to reward. I'm willing to risk, quite sizable percentage marks to gain much bigger percentages. So I think it's more useful to think about where it's likely to go, when it comes to higher targets, than trying to catch the absolute lows on these appealing numbers that sound appealing, like $80, $70 thousand or whatever. Yeah, of course you can put limit orders in on the way down, but don't wait for the all-time low because it may not appear. And if it does appear, excellent. But the targets are higher in my opinion, and they're the ones to focus on. You could buy. I mean, I'm not suggesting you do this, But I'm just saying, I'm just putting it out there. You could buy now, or the idea of buying now, although you recognise that it's unlikely to be the low, it's certainly not the top. As far as my analysis is concerned, it's not the top. So buying here to sell at the end of the year should result in profit anyway. So that, you have to think about it in those terms. Because between now and September, it's really not that far away. That'll whiz by. And then around August, September, once it's time to scale out, or maybe even be completely out, yeah, that's different at that point then, because you're like, okay, the money's in, made the money. This is what I've made. This is the profit. Okay, that's an achievement. We've won. That's success. That's what it looks like. That's what it smells like. But if you are chasing those all-time lows and you don't get them, and then you get worried, and then you FOMO, then you end up buying sort of, I suppose, temporary peaks, and then you sell them when they start to consolidate. Yeah, try and have a more relaxed approach to this market. So realistically, based on the weekly, and I'll leave it with you after this, is that at the moment we are currently still on the 10 exponential as far as the candle body is concerned. It's a spinning top on the weekly, which means it could go either way, which means Benji could be right, I could be right, you could be right, anyone could be right. It could go in either direction at this point now. It's hanging on, just literally hanging on for dear life on this weekly moving average, which previously has been decent support. But if we lose it, probably the worst I would be looking for would be around the upper $80,000 zone. I'd find it pretty hard to imagine moving into the 70s based on the way it looks right now. I don't think that's going to happen, but you can't rule it out, obviously. And if it did come down to there, obviously that's a previous peak over there. That's a significant peak. That's not too far off the previous all-time high as well. So it's on the cards. We can't rule it out, but at the moment it seems to suggest that if you're counting on this area being hit and holding out for it, it might not. This probably more realistic, as even though it's quite a drop. And obviously we know what would happen to the altcoins if that were to happen. That's only an 8 or 9% move. You'd be looking for another 20% on altcoins at least. So yeah, I mean, it's a tricky market. We like crypto because it's volatile. We like the big moves, but it carries enormous risk. Obviously, it's a risky asset class. That's why there's so much touchiness about it. And in fact, I think that's a lot of the reason why we're not getting a large amount of new retail into the market. Because I'm in touch, I suppose, with the with your average Joe, through whether it's Patreon or Telegram or whatever, but also out on the street, you'll know just as much as me. You speak to somebody about crypto, what do they think? They think of all the horrendous things that have happened over the last few years, FTX being one of them, and whether you love him or hate him or have no real opinion about him, Trump appears to be in favour of crypto, and then there's just people out there that just don't like anything that he says or does or anything at all. So you have this visceral reaction to anything he says. He could say, right, just worked out how to cure cancer, and says, well, I want my cancer, how dare you cure my... Some people just are like that now. Politics is very divided, and it's a horrible situation out there. So, and people don't trust him, I think is a good way to think about it, right? And so he's all about crypto, or appear to be about the crypto friendly, but then the retailers are like, well, if he likes it, I don't like it. So what I'm trying to put out there is that people are very scared, new retailers are very scared, or who could be a retailer does not want to be one. Because all they hear about is horror story after horror story after horror story. They don't reflect on the fact that Bitcoin is still sitting quite significantly high from where it's ever been in the past, which is the one way to look at this market. Bitcoin is holding prices that are significantly higher than it's ever seen before. That's not a horror story. That is certainly not. That is an absolute beauty of a success story. that's the reality of what we're looking at here. We're looking at a Bitcoin that is just short of $100,000, something that people have said would never ever happen ever before. Yet we're staring at it in the face. That's not a horror story, but yeah, retailers are still holding off. They're not into it. They don't want anything to do with it. And if the cycle only has now until September to fulfill, we do need to see some magic. And another thing, unfortunately, retailers do get rinsed for the most part. That's the nature of a retailer. Retailers always get rinsed. You've seen dumb money. You've seen all these things. You know it by now. The name of the game is to take the money from the retailer. I'm a retailer. You are retail, right? But that's the name of the game. So until there's a door to get them in, to invite them in, people aren't really. There's not really much money to be made by anybody. So it's in everybody's interest to get them in. So it wouldn't surprise me in the slightest that over the coming months there will be an invitation to try and get rid of the negative connotation of crypto, to try and forget about the FTXs and all this sort of stuff, and then retails do. The retail will start coming back in again. We're in a year of lower rates for the first time in a long time, and it looks like that's how it's going to be. It's a turbulent situation with the tariffs and the Chinese chips and whatever is going to come next. And all markets are feeling that, but it doesn't, to me, look like the market wants to pop or break down significantly. It's all just part of this uptrend, this significant uptrend. And also, it should also be part of this particularly interesting situation with the US dollar, which is this giant ascending channel, this rising channel, which is supposed to break down, or not even break down, but consolidate down, this year. Right, it's quite a long video, probably a lot of insignificant rambling there. But if you made it to the end, please let me know. If you want to join the Patreon, there's links in the description. Other than that, hope you have a nice day. Take it easy.